A very good morning, good afternoon, and good evening to all of you. My name is Shigeharu Suzuki, and I serve as the chairman of the Japan Securities Dealers Association, the proud co-host of today's webinar alongside Financial Times. Thank you all for gathering virtually at this event, shaping global financial centers for 2021 and beyond. On behalf of the co-hosts, I would like to say a few words. We gather here today at the time when the environment surrounding the global securities market is rapidly transforming. While the prospect of the COVID-19 vaccine has provided a beacon of hope, at the moment, the spread of the pandemic is growing ever more severe. Against the backdrop of these growing challenges, the role expected of the securities market has shifted dramatically, including in the field of sustainable finance. In this hour-long webinar, our renowned speakers will discuss what shapes a leading financial and business center, as well as how Japan can increase its competitiveness in a post-pandemic future. To speak of Japanese market in particular, there are a number of notable strengths, including but not limited to the largest group of companies in Asia, bolstered by the more than $18 trillion worth of financial assets held by Japanese individuals, in addition to the high-quality public securities and the living environment. On top of this, initiatives for sustainable finance, as well as strategic reforms to make the market more attractive and to improve the environment to attract overseas financial businesses have been accelerated. I'm confident that these will serve to further expand Japan's role as an international financial hub and introduce to the world the upgraded finance place Japan. Speaking of strengths of Japanese companies and organizations, as a slight aside, last year the Japanese asteroid explorer Hayabusa 2 returned to Earth with asteroid samples, completing its 6-year journey in space. It can be said that the unprecedented success of this mission is a testament not only to the world-class technical capabilities of Japan, but also to the strong teamwork of the diverse, highly skilled members that made up the mission's team. I strongly believe that to invest in the Japanese securities market is to put your faith in the potential of such advanced technologies and organizational capabilities, which are invaluable for our world's efforts in overcoming the challenges that we face today. Today we have the honor of hearing from esteemed experts, including Commissioner Himino of the Japan Financial Services Agency, in a topical panel discussion. For global market participants who are joining us here today, it is my great hope that this webinar will serve as a valuable space to rediscover the potential of Japan as a financial center. Thank you.
Well, good morning, everybody. I should say, ohayo gozaimasu, konnichiwa, konbanwa, depending wherever in the world you are watching us. We are delighted that you're joining us for a Financial Times webinar together with the Japan Securities Dealers Association, looking at a truly crucial question that matters not just to people sitting in Tokyo, where I used to work, but also those sitting in New York, where I currently am, and in Europe as well, including London in particular, where the Financial Times is headquartered. And the question is this: what is the future of Tokyo as a financial center and financial centers in general in the era post-pandemic? Let's all hope there is going to be an era post-pandemic. Will it be the case that the same group that dominated before continue to rule the financial markets globally? Are we moving to a new world of networks and clusters where actually it's not as important to be in one physical space? How are geopolitical tensions, and in particular, the crucial question of US-China relations and how that impacts on places like Hong Kong, going to play into this? And what about the environmental questions? Will that affect who comes out top? What about things like Bitcoin, which is all over the news today? Is that going to change how we imagine financial centers going forward? These are a lot of huge issues that people are very keen to know about. And we have a truly fantastic panel of people to talk to us about this today. We've got Ryuzo Himeno, who is a commissioner at the Financial Services Agency. In fact, I know Himeno-san for many years because when I used to work in Tokyo myself, I think almost 2 decades ago, we sometimes had lunch back in the days when people could actually have lunch and discuss the state of the world. We've got Michael Mainelli, who is in a terrifically good position to talk to us. He's the Chief Executive Officer of Z-Yen Group, which is looking at financial centers from many, many aspects, and can give us a view not just from Asia, but globally in terms of the issues that really matter in terms of shaping financial centers. And we have Derek Young, who's president of Fidelity Japan. He's been there for a couple of years. Someone like me back in the days when I was reporting from Tokyo as a correspondent, I think he's fallen in love with the country and is going to be waxing probably even more lyrical than Himeno-san about the charms of Tokyo and why Japan probably seems rather more rational than many of the other places we could be in right now. But before we start off with this debate, I'd like to start with asking Himeno-san, from the perspective of the Japanese government, what are you doing to make sure that Tokyo remains a financial center, and can it really compete in the world today? And you're on mute, Himeno-san.
Okay. Thank you, Jillian-san. Many people tend to associate the strengths of the Japanese market with stability, like political stability, reliable infrastructure, safety and security, or smaller social divide. But I would argue that the key selling point of the Japanese market now is reforms and dynamism, which tend to be underestimated or overlooked often in many parts of the world. For example, which stock index do you think has performed best since the start of the Abenomics? Chinese, American, UK, German, or Japanese? Let me show you a slide for a second. Yes, Nikkei performed best among the 5 indices here, tripling the value if invested in the local currency. During the period, 8-year period, Japanese yen was depreciated, but even if you measure in dollar, even if you invest in US dollar, the Nikkei performance is second only to S&P 500. And I would say this is the outcome of the continuous and cumulative effort of reforms by the corporate Japan and the Japanese government. But more important thing is that more is coming, and lots more reforms are in pipeline. For example, the JFSA and Tokyo Stock Exchange plan to revise their corporate governance code to require listed companies to come up with plan to enhance diversity in the middle management, diversity in gender, diversity of lifetime employment versus mid-career hires. So the cozy community of male lifetime employees is changing. And if you look at the policy speech most recently done by Prime Minister Suga, there are around 100 specific policy pledges like this one. And so I would say people tend to see Japan in the after image of the 1990s or 2000, but things are changing. No more lost decades in Japan. Later, I would like to touch upon what the JFSA and other ministries are doing to facilitate entry to the Japanese market. But that effort is meaningful only if the Japanese market is attractive. And I would say Japanese market is becoming attractive and getting more so. Thank you, Jillian.
Thank you very much indeed. And I should say that as a sign of dynamism and flexibility and adaptation, I don't think I've ever had a seminar with a Japanese government official who was not wearing a jacket and tie. So I should say, Himeno-san, congratulations for moving with the times. It's ironic that it's the one American who's on the call who is actually wearing a tie and a jacket. But this gives me a chance to bring in Derek, who has been in Tokyo now for 2 years. Give you a no, please, Himeno-san, don't feel you have to put it back on. No, I was actually complimenting you on not needing to put the jacket on. It's wonderful. It shows the new Silicon Valley vibe in Tokyo. Derek, I'd like to ask you how you assess Tokyo coming into it 2 years ago. Before I do that, I should say anybody who's watching, please do send in questions because I'm going to try and bring them in as we discuss these issues. And if you start sending in the questions now or anything you'd like to ask, it gives you a chance to work out the tech and for me to see them and weave them into conversation. But Derek, do please let us know how you assess Tokyo.
Yes, thank you, Jillian. And I wore a coat and tie because Himeno-san is on this call. And he and I we have a good friendship, and I knew that he would be on, and I feared that he would be on in a coat and tie, and if I wasn't, it would be disrespectful in Japan.
Just to show that outsiders, Gaijin don't realize how fast Japan is changing. But anyway, Derek.
It is, right? So it is like the best example. I mean, it is a great example of how Japan is changing. And so when I look and I think about Japan, Himeno-san hits so many issues that are absolutely critical when you think about financial centers and what's happening here in Japan. And I must say that I came in 2 years ago with Fidelity Investments. Fidelity has been here for 51 years. So we're the longest foreign asset manager to be in Japan. The history is great. The partnership with Japan has been great. So for me, when I hear things about, where Japan has been and where it's going, I do have a long history, 24 years of working in Japan, albeit 22 of those in Boston. But when I see what's happening here, there's a real change that's taking place. Himeno-san was all over it. And I think when you start looking at financial centers and you think about one of the key factors of financial centers is wealth. And when you look at Japan, I mean, you're looking at the third wealthiest country in the world, right behind the US and China. You're looking at the third largest pension market in the world behind the US and the UK. You're looking at $18 trillion of cash and equivalent assets on household balance sheets in Japan. So when I think of the starting point, the base of a financial center. You know, Tokyo, New York, London really ring well for a reason, right? When you look at that. So there's a lot of things here that I think provide an underpinning of what's needed to think about success. And certainly if we look and we think about the points Amino-san was making about infrastructure, you think about quality of talent, you know, the lifestyle here to be able to attract talent. I got to tell you, I'm from the US. By the way, I grew up in Georgia, so I grew up down south in the US, right? But then lived in Boston for 22 years. I can't imagine seeing 7-year-old children walk down the street with their backpacks on in the US with no adults around, right? Walking to school by themselves. It is so safe. The quality of life here is spectacular. You see that, you feel that. So I say this because there's something very unique about what Japan has, and to listen to the transformation that's taking place right now that Himino-san mentioned, it just shows you things are really changing here. And so I hope that people on this call will appreciate what we're seeing. If you're here and you put your finger on the pulse, you can tell things are different now. I mean, the American is wearing the coat and tie, right? Thank you.
Well, that's wonderful. Well, I'm going to come back in a moment and drill down a bit more into both of what you said. I want to ask Himino-san a bit more about what you are actually doing to bring people in or make it easier, because it hasn't always been easy in the past at all. And I'd like to ask you, Derek, a bit more to talk about how you find the local infrastructure and also how you assess the geopolitical issues in relation to Hong Kong and Singapore right now. But before we do this, Michael, you look across financial centers around the world. You're going to give us a teaser of a few amazing slides just to frame this conversation as well. Tell us how you assess the issues right now.
Well, thank you, Gillian. It really is a pleasure and a privilege to dial in from London. I've been watching Japan's development since 1983 and come from a family of deep Nipponophiles. My parents lived in Japan for some years. My sister and my son are fluent speakers, and I now have a grandson in Yokohama. So hopefully I'll get to see him soon. But I'm here to provide a staccato kind of rapid fire international perspective, not a personal one. And I just pulled together a few slides really to have a look at where things stand. The first thing I'd kind of like to point out is that the old theory of having a financial center was you had to have a big economy behind you. But it was pretty clear by about 1995 that this old theory was unreliable. There were over 100 different centers cooperating and competing, and many were relatively small yet effective, think Zurich, Singapore, or Dubai. So it wasn't really the case that you automatically had a large financial center like London or New York based on a large economy. Over the last 15 years, we've built 3 indices: global financial centers, global green finance, and smart centers. And we survey about 120 commercial centers 3 times every 6 months on all 3 indices. And we'll be publishing our 29th edition of the Global Financial Centers Index next month. And anybody who wants to contribute, please feel free to go to our site and do so. More importantly, though, the top 25 centers, we're looking at the future perceptions of thousands of people. The last edition, over 6 months, had 85 respondents globally, rating centers. And Tokyo is very clearly up there. It is a financial center. It's one of the tops, and it's been consistently up there at 4, 5, or 6, really since the index began. The second thing you'll notice here is that the top 5 centers over the 5 years have really pulled away in terms of their growth, but also their concentration is really quite phenomenal. And the real rise over that entire period has been the Asian story, the China story. And in fact, we produce our index in cooperation with the China Development Institute, something that I used to get laughed at not even 10 years ago when I said that the top centers would be in Asia, and 3 of the top 5 are. The other thing I'd like to look at is just briefly, and I think both Himino-san and Derek mentioned this, that really there are many different ways to compete. You need rising higher requires consistently better performance across our 5 areas of business environment, human capital, infrastructure, financial sector, and reputational in general. In the case of Tokyo, if I had to pick one area to focus on, it would be the general business environment, particularly for international firms with non-nationals, visas, work permits, because the core rule for any global financial center is really to treat all comers fairly. So I was really pleased to hear the current focus on easing that up. Where might things go? Well, typically specialization is by industry sector. And in the case of Tokyo, and I think Derek alluded to that, the big opportunity lies in investment management. A great area for cooperation with centers like London lies in putting Japanese pensions to effective use in overseas investments. And I'm looking forward to some, perhaps in our chat, looking at the initiatives to create an Asian version of the EU's UCITS, the undertakings for the collective investment in transferable securities, so a regulatory framework that would allow for the sale of cross-border bonds. Anyway, where might Tokyo go? Well, obviously one hot topic these days is green, but specialization in financial center competition allows you to specialize in banking, insurance, reinsurance, asset management, equities trading, bond trading, etc. But we do see some wider themes: regulation, the sweet spot between too tight and too loose, tax, ESG, ethical Sharia, fintech, increasingly focusing on data, cyber, and consumer rights. You know, could Japan be the opportunity to bring GDPR to Asia? And green. I would just conclude really by saying that, you know, in 1989, a good friend of mine, Bill Emmett, published The Sun Also Sets, showing the challenges Japan faced. And I think Japan actually has an opportunity to teach pathfinding on QA, pathfinding on demography, and I think finally, pathfinding on what are we going to do post-COVID-19. This slide here looks at the commuting intensity versus the financial concentration and points out there seems to be a center there encapsulated in that oval of London, New York, Tokyo, Hong Kong, San Francisco, cities that are going to really need to think, because we're finding that the two sectors, finance and scientific and technical, and remember, in the city of London, that's about 188,000 people working in finance in the core, but also 118,000 working in science. And these people are moving, I think, more towards clusters rather than centers. As I've said, the physical city of London has had an economically torrid COVID-19, while financial and technology services in Southeast England have been booming. So Tokyo could be this gateway to a whole set of Asian clusters. Thank you.
Well, thank you, Michael. That was absolutely terrific. And we were very keen indeed to bring you in with those slides to provide a way of framing the bigger debate. And I think that's a great moment to bring Himino-san back in again and really spotlight 2 or 3 key issues which came up in those charts. Firstly, the business environment clearly is one metric on which Tokyo does not perform at all well. What precisely are you going to do to try and address that? And secondly, I want to ask Derek in a moment. I mean, Tokyo does very well in terms of the banking and finance side, but it's nowhere in the investment management, which is stunning given that Tokyo is sitting on such an incredible pool of wealth. I mean, some might say it's almost shameful. So I'd love to ask either Himino-san or Derek what exactly you're going to do to try and address that. And then we'll turn to the geopolitical questions. And so Himino-san, you first. How are you going to build a better business climate? And what about that missing gap with investment management?
I'm very happy to hear that question because we are exactly focusing on business environment and asset management. And with regard to business environment, we had talked with many expatriates working in financial sector in Japan and got lots of complaints. And this is good news that there is things to be improved, we can improve. And the complaints related to business environment span various areas, but the key focus was in 3 areas. The first one, JFSA, us, how we regulate and supervise. The second one was the tax. The third one was immigration. And with regard to our supervision and regulation, in January, we started office which does work only in English. And they do whole process from the registration, reporting, inspection, supervision, all in English. It is at the moment only for newcomer asset managers. But already after we inaugurated the office in January, we got many inquiries, and some of them with specific plan to come to Japan. And we plan to add additional services. For example, we prepare a list of English-speaking tax officers, tax lawyers, English-speaking lawyers, English-speaking real estate agent, etc. And the newly created office would also be a gateway to the distant services. We are also changing our regulatory framework so that those who are dealing only with professional investors can start business just by notification to the FSA rather than licensing or registration. The second major area is tax. And there is a saying among expatriates in Japan, never die in Japan. If you die in Japan, your whole global asset will be taxed at a high Japanese inheritance tax rate. We are proposing to the parliament to change our inheritance tax law so that asset held by foreigners in Japan, asset held abroad would be out of the scope of taxation in Japan. So still, you shouldn't die in Japan till the 31st of March, but if the parliament approves the government proposed bill, you can peacefully die starting from April the 1st. Also, asset managers have had some doubt whether carried interest they gain is imposed of 20% flat tax rate or progressive tax rate. We would clarify it would be only under 20% flat tax rate. With regard to immigration, there are many measures Justice Department is introducing. For example, if you wanted to open an asset manager office, you come to Japan with temporary visa, and when you want to start working, you have to go back to your country and apply for a permanent visa. That is changing. You can just come to Japan with temporary visa and apply for a permanent stay for professionals. This is not just FSA effort, but government-wide effort going on. And we would plan to address any further obstacles newcomers would experience and eliminate any remaining obstacles for newcomers.
Well, thank you very much indeed, Himino-san. Derek, I'd like to ask you how you assess this, because you know these are very striking words coming from the Japanese government. They're obviously what many international investors want to hear. But as someone who lived in Tokyo myself, I know that sometimes bold promises aren't as easy to implement as taking off a jacket, for example. So I'm curious, how much confidence do you have that Tokyo will be able to implement this? And you know, what kind of grading or rating would you give to Tokyo right now, given your experience and knowledge of other financial centers as a business climate to do business in?
Yes, a great question, Julian. I think when I look at it, and by the way, I've had the chance to meet with Himino-san, right? He shared these with me. And he also told me then to make sure I didn't die before April 1st. So that stands out in my mind. But anyway, I will say that when I sat down with Himino-san and I heard what he was saying, particularly the English-speaking office, for those investors like the ones hopefully who are on this call who are looking at coming to Japan, Japan can be very intimidating. And we know that, right? So when you look and you think about an environment being created that will give you the opportunity to come in and take the friction out of the system It's absolutely critical. So I'm optimistic. I think the rate of change here, as we would say, it's increasing at an increasing rate. So you can really feel things like, the chop, the hinka going away, right? The signing of documents that I would have to go in and do all the time at the office. Now we're seeing digital signatures be quite common here in Japan. And so you're watching the rate of a change accelerate. And by the way, I would attribute a lot of this to COVID. I think it's forced Japan to think differently, right? You have to operate at a different level in today's world. You have to be dynamic. You have to use technology. You have to use telecommuting, right? All of these things got forced upon Japan with no choice. And so as you see that happening at the same time where you're watching what the government's doing, you can tell it's a lane changing event. I mean, we are changing lanes globally for all of us, right? We see that in financial services firms as most of us work from home. But you can totally feel that in Japan, it's having that same impact of digitization, technology infrastructure, these key factors that are there in a country that has the wealth to support it, as I was mentioning earlier. So I'm very optimistic about where it's heading. It doesn't mean it's going to be easy. There are things about this that will be very difficult when I look at it. I think people having the faith that it's really different here in Japan. If you're sitting in the US, if you're sitting in Europe, it's hard to really appreciate the rate of change. You have to come here and see it yourself, right? And so I think there'll be skepticism, and skepticism is always that challenge. But I think when you look at Asia, there's going to be multiple gateways to Asia. I mean, the growth here is spectacular. And when I look at it, it's not a competition for static market share. I mean, those games are tough, right? And I'll go back to, because Michael was onto this when he said it, right? There's plenty of opportunities for multiple places in Asia to do quite well and to be prominent gateways into Asia. It's not one country competing against another country on the basis of a static market, right? There's real growth that's taking place. Japan is very well positioned to take advantage of organic growth in Asia. And so I think its prominence will continue to escalate. It doesn't have to be at the price of someone else losing market share for Japan to grow and gain market share. So, and I think, by the way, the focus on what does Japan need to do is the most important thing that the Japanese government can do, rather than thinking about, is this a competition, right? Look at what Japan has to offer, bring out the best, correct the challenges that are here, and then take advantage of the natural growth in Asia.
Right. Well, I'm going to ask Michael some of these issues as well. Before I do that quickly, Derek, I'm curious, when you look at your Asian operations, how much of it currently is in Tokyo? How much of it is in Shanghai or in Hong Kong? Do you have, and are you shifting your relative footprint or weight at all at the moment?
It's a great question, right? So we have presence across Asia. We're very proud of it. We have great operations in Hong Kong, Singapore, China, obviously, multiple locations in China, Taiwan, Hong Kong. I mean, you just look at it, Singapore. So you look and you think multiple entry points into Asia. And again, a long history of having been here. Japan plays a very important role. We were the first international destination for Fidelity investments. We're very proud of that. But we see our growth opportunities across Asia being significant, right? And that's the reason why when I think about sitting on the Asia Operating Committee at Fidelity, which we were in a meeting this morning, and we're talking about the opportunities everywhere, across Asia, right? Japan plays a role in that. Again, not in competition with other regions, but instead, how do we leverage that collective expertise across Asia to help grow collectively?
So in practical terms, just quickly, so what numbers do you have in Tokyo as opposed to Shanghai, Hong Kong, Singapore, and how would that compare to 2 years ago?
Yeah, so the numbers right now, assets under management here are around $57 billion in Japan. We're up in terms of where we were a couple of years ago. I don't have the exact numbers for the rest of Asia, but we also have a strong book of business across that region as well. We're up. Obviously, we're seeing growth across the board. Last year was our strongest year in terms of net flows. All countries had positive flows, as we were reviewing this morning, it was spectacular to see. Things are going really well collectively. I think we're taking advantage of a great investment management platform. You asked earlier about investment management platforms, in Tokyo. I think investment management platforms across Asia are all seeing growth opportunities here, right? As people think about how do you position for growth, where are those growth opportunities? Hamino-san showed you what's going on in Japan, but you also see a real focus on Asia as well, beyond Japan. So certainly what we're seeing in China and other areas in Asia give us optimism about continuing this growth that we've had certainly over the past year.
Right, Michael, I'd like to bring you in and ask you a couple of questions here. One is, why is Tokyo performing so badly on investment management? And is that something which can actually be fixed or not? Michael, I'd be curious to hear your thoughts on that. And then also to pick up on the theme that both Derek and Hamino-san touched on, which is this idea of having sort of an Asian connectivity. I mean, is Tokyo competing at this point with Hong Kong and Singapore and Shanghai, or can it actually leverage off them collectively?
Okay, well, thank you, Gillian, and I'm looking forward to Hamino's recommendation on the appropriate temple to pass away. And but yeah, this concept, by the way, of concierge regulation, where you're kind of walked around and spoken to in your own language and registered, is one that I first saw in Busan, actually, about 12 years ago. And it's a fantastically powerful model. And I think that actually has been a bit of the problem. Many firms in the asset and investment management space are small. We've obviously got the big players like Fidelity, but we also have a lot of small players, and a lot of the small players are the ones who make the initial entrance, and they can find a foreign environment very, very intimidating. I think the second thing is, again, within Asia, we've got the traditional Japanese housewife as the saver. And that's been a very different, much more active model. A lot of the pensions type investment requires you to be a little bit passive and let the professionals get on with their job. And I think that's been a trust thing. And finally, it's just been a lot of the frictions. Japan, to a large degree, like China, really began to exhibit the great outpouring into the West, 30 years ago or so. But that's relatively recent in the sense of pensions and investment. And there does need to be a bit of familiarity with the domestic population in that. But I've probably expended my knowledge because, as I said earlier, we're covering a whole bunch of cities. And so I'm broad, but very, very shallow. On your second question, which was very much about where is this going in Asia, there are fantastic opportunities still. We've barely scratched the surface. I see at least another 30 to 40 years of Asian growth, leaving geopolitics to one side, but just in a pure sense of demographics, growth, and opportunity. I'll give you a few examples. The Chinese bond market is one of the few bond markets where you can go in and get something done and actually make a return. That's got to be attractive. We saw this year the announcement that China is going to bring out an emissions trading system. Well, we've got an EU emissions trading system, a Chinese system, a Biden administration is going to be looking at climate, and you've got this enormous potential growth in the carbon markets and again access to that. So it is much more about cooperation than it is about competition. But the point I think about Japan is this bit about being an island and being a bit offshore. It's fascinating when you think about Singapore, Zurich on the edge, or London on the edge of Europe. People don't like to trust completely in wherever they're investing. They like to hold back a little bit if they have a choice. They're looking for that stability of regulation. And I believe that Japan has an opportunity to be seen to be treating all comers equally, and that's going to allow it to become a springboard to base around. We've seen this in London in so many markets. So the international bond markets, foreign direct investment in the UK numbers are a bit screwy, principally because Americans will bring their money to London and then invest out, and the official statistics find that, quite rightly, a little bit difficult to deal with. So I believe this springboard opportunity for Japan is huge. And the example I often give is, I've done a lot of business over a number of years in a lot of countries. I have never seen anybody do a deal in New York or a deal in Beijing where there wasn't a domestic component that required them to be there. But I've seen deals in London and Singapore where people just fly in. It's got nothing to do with Singapore, got nothing to do with Britain. And I believe Japan has an opportunity to build up that kind of a reputation.
Right. Well, Himino-san, I'd like to ask you about that, because obviously that can only happen if it's easy for sort of, suitcase investors, if you like, to actually navigate through the culture and things. But of course, the other question is, people will be looking at, if they are using Tokyo as a springboard to Asia, looking at the question of geopolitical stability and the degree to which, Tokyo can or cannot maintain good relations with the rest of Asia, but also the degree to which its attempts to act as an Asian hub will be derailed by potential tensions between US and China. Do you think you're going to benefit from what's happening in Hong Kong at the moment, or is that going to be more of an impediment?
Thank you, Gillian, for the question. I believe Hong Kong will continue to be an important international financial hub in Asia, and Shanghai would also be an important center. But in the past, having single financial center in one time zone was the most efficient way to do business. But everywhere in the world, geopolitical risk, pandemic risk, climate disaster risk, or cyber attack risk, various risks are increasing, and no center is free from those risks. So I suppose in the post-COVID era, people would put more weight on resilience rather than just simply aiming at an efficiency. And so I fully agree with Michael-san's proposition of cluster of network things. I don't imagine Japan would be the single only international financial hub in Asia, but as Derek-san said, with the growing risks, people would want to diversify location of operation, and Japan is willing to willing to provide a good option to choose for international firms.
Well, we have a great question from some of the audience, which I'm going to come to in just a moment, which I want to pitch to Michael, about the correlation between fintech, AI, and emerging technologies and the performance of financial centers. But before I do that, so Michael, you can think of your answer right now. I'd like to ask you, Derek, quickly, you're a truly made in American company. I mean, most people regard Fidelity as being one of the core American financial names. Does that hamper your operations in a place like China? Do you have operations in China? And are you sort of withdrawing from Hong Kong or withdrawing activities from Hong Kong because of the current troubles? And would you be, keen to concentrate more in Tokyo as a result?
Yeah, it's a great question, Julian. First of all, I have the asset levels. So 159.5 billion for all of Asia at the end of 2020. It was an all-time record high for Fidelity, of which 50 at that point in time, 56 billion was Japan. And so it's really important to think about it that way, because we have terrific opportunities across Asia, right? So we have not changed our commitment to China. We have not changed our commitment to Hong Kong. We've not changed our commitment to Japan. We love having the opportunity to have that diversified business model, as Amino-san, went through and discussed, right? There's great opportunities to think across Asia about, what are we doing? How are we positioned? How do we take care of people? I mean, our assets in Hong Kong are over $31 billion, for example. If you go through and look at China, we have great growth opportunities there. And we're excited about those opportunities. We have back office operations in China, very large operations in China. And by the way, with people who speak fluent English as our employees, as well as fluent Japanese, so it's the service level that our customers get as a result of those partnerships has been absolutely critical to our success. So when I look at it from our standpoint, we think the opportunities across Asia are broad. We'll continue to take advantage of them place by place. But I think the real important thing to get out tonight, Jane, is just really the transformation of what's happening in Japan, and the fact that we really are going to have, I think, more opportunities to continue to look for growth in Japan going forward as Asia grows, and the transformation that Amino-san and Michael talked about here. Really, I think we're going to get a business environment in Japan that's going to be quite different.
Right. Well, let's pick up one of the questions here from the audience, which is about the correlation between fintech, AI, and emerging technologies and the performance of financial centers. Michael, do you have thoughts on that?
Yes, I think I'll keep them brief because they're probably fairly obvious, but in a weird way, what people have forgotten is most of the revolution in finance for the last half a century, really since the 60s, has been computerization. That's what's been driving it. We're now seeing, of course, greater connectivity, greater processing power, and the pervasiveness of digitization has led to the pervasiveness of finance. So finance is now everywhere and embedded in processes it wouldn't have been embedded in before. I can charge in novel, interesting, and wonderful ways for any sort of product and services simply because the accounting for it allows me to wrap it up. I don't mean technical financial accounting. I mean, I can just look at websites and charge people for ad services or things like that. So I've got an amazing amount of digitization going on. The correlation has always been strong, and across our three indices, it is very strong. That's why we run the three of them. And I think COVID has really shown that up. So if you look at the City of London, the last figures I got just recently were that we have about 4% of the working population turning up every day. And the exit polls say that those 4% are the cleaners and the security guards guarding the empty buildings. What we have seen is this huge group of finance people and technology people going away and working at home. And guess what? It turns out that most of what they're doing is together. And I think that's the important bit. We've seen two huge industries that are so increasingly interrelated. In some ways, I wonder if technology will subsume finance. That's kind of the little bit of moving around that you do, but that's probably 50 years off. But I can see this pervasiveness of financialization has really taken it, and everything that we're doing is digital. So it will increase that correlation.
Do you presume, before I turn to Himino-san and Derek, do you presume, Michael, that the people who are currently working out of the office in finance and tech to a degree in somewhere like City of London or New York, do they go back to the office full time, or as they were working before, or at all? Or are we going to see basically?
Well, I should defer to you as the yeah. I should defer to you as the anthropologist, but I believe there's going to be a rubber banding effect. That's clear. But a lot of the discussion in London is about more of a campus style or a mall style approach, with people not turning up every day, and in fact trying to encourage more concentrated numbers of interactions amongst international people doing complex deals in insurance, reinsurance, M&A, and then kind of disappearing. So it's sort of a completely different model. But I would say the culture, to me, and again I defer to you, seems to be one where financial services is taking up effectively an IT, a programming culture. It's certainly not going the other way.
Interesting. Himino-san, I'd like to ask you a question, another question from the audience, which is, what is Japan's appetite on green sustainable finance? I say that because on the slides that Michael presented earlier, Tokyo wasn't doing that well. Can you catch up?
Right. That's the idea. We are kind of transforming ourselves as a top priority of the government. Last autumn, the Prime Minister Suga declared Japan would attain carbon neutrality by 2050. And there is a government-wide effort going on. And JFSA is also trying to contribute on the part of the financial sector policies. For example, METI and JFSA is jointly developing a guideline for transition finance, financing so-called olive-colored corporations, to use your terminology, greener, and we are trying to come up with that guidelines, not just green and brown taxonomies. The government has also announced establish a 2 trillion yen fund, or $20 billion fund, to support corporate investment to develop technologies or transform themselves. The JFSA has recently launched an advisory panel to discuss how to incorporate climate risk into financial institutions' risk management. And also, Japan is a country with the largest number of supporters of TCFD disclosures. And we want to go further from that. And the panel is discussing how we can do more. So it is true. We've been a bit slow, but we are making a very rapid start.
Well, thank you. None of the Asian centers score particularly well in that respect. It's striking. We have barely any time left at all, but I'd like to ask Himino-san one last very quick question, which is, will Brexit be an opportunity to strengthen UK-Japanese relations? That's from a person watching. You have 1 minute to tell us whether you think Brexit's going to help or hinder.
Well, at least one byproduct of Brexit is UK-Japan economic partnership agreement, and that agreement contains coordination mechanism on financial sector regulations. There is an item on the consultation on corporate governance. So at least Brexit has produced and closer coordination, and also UK authorities, Japanese authorities has been already a close coordination. So we very much look forward to cultivate that even more.
Right. Well, thank you very much indeed. Well, sadly, very sadly, we are out of time. I found it a fascinating discussion. And I must say, I take away 3 or 4 key points from this conversation. Firstly, it was great to have Michael's PowerPoint slides, because it reminded us all that although Tokyo is one of the quietest financial centers in the global financial system, it remains incredibly important in terms of its sheer size and the degree to which people rate it so highly. And it's worth stressing that, because COVID has made us all look inwards and become quite myopic because we can't travel anymore. So it's worth stressing that. The second point, obviously, is that Michael's charts also show there are a number of big challenges around issues to do with business climate. And there's really quite startling lack of footprint in investment management in terms of global appreciation and rankings, which is both a problem and also an opportunity. The third point really is Himino-san has laid out a number of ways that the Japanese government is going to try and address this. People like me who are journalists and paid to be cynical may well say, well, they would say that, wouldn't they? Let's see the proof of the pudding. But perhaps the third point that I'd stress is that precisely because Tokyo has been so quiet, there is probably more happening beneath the surface than many people outside realize, and not just in terms of dress codes and the degree to which the gaijin do not appreciate the changes. And the last very quick point is I am very curious to know whether COVID-19, to pick up on what Derek and Michael said, is going to be a catalyst for radical change in Japan. I wrote a book about Japan many years ago in which I pointed out that the shock and the degree to which structural changes had been forced on Japan after World War II unleashed an extraordinary burst of entrepreneurial energy and created companies like Sony and others in the decade or two after World War II. It often takes an external shock to break down the structures and give people an excuse to think differently in Japan. So maybe, just maybe, COVID-19 may provide one of those digital trigger points, who knows? But anyway, I'd just like to say thank you all very much indeed for a fascinating discussion. Best of luck in navigating these challenges, and I look forward to eating a fantastic sushi meal with all of you at some point in the future. Thank you, and good luck to all of you. Thank you.
Thank you.
Thank you. Very good.